in terms of chemistries, this is not a competition. It's about adding more choices, and that will just increase the adoption of electric vehicles more, regardless of the market.
China wants the EVs to be for the masses, not just for the wealthy. And I think Europe is the same way now.
My number one thing to increase our progress towards net zero is transparency in reporting, and I think consistency in reporting metrics.
ESG is going to be a fundamental factor for any of these battery metals moving forward. It's not going to be reversed anytime soon.
So hello everyone, and welcome to another one-to-one mining investment APAC online content session. Today, to speak on battery metals trending towards a greener future, we have Cormac O'Leary, Managing Director at Electrios Energy, Cameron Perks, Senior Analyst at Benchmark Minerals Intelligence, Alan Ray Restoro, Metals Analyst at Bloomberg NEF, and Scott Yaram, Director of Metals EMEA at S&P Global. So thank you everyone for joining today.
Thank you, Amy.
Thanks, Amy.
And so to kick things off, we have a situation now where the demand for a lot of the so-called battery metals is on the rise, while supply seems to be lagging. How do you guys think that we can help to incentivize further exploration and investment in the field so that we are able to bring that supply up to a space where it needs to be to further propel this industry forward? I will direct that over to Cameron because he's nodding.
No, I was hoping someone else might jump in, but that's okay. Look, I actually think that's particularly important to see OEMs getting involved. So we're seeing an increasing amount of activity in that space, although it's still small. BMW and Livent, BMW Ganfeng, and following on from VW's Power Day this week, I think it was, and the company said that they were looking at the whole process chain from mine to recycling. They said we have to enter the raw materials business. I can't exactly remember what exactly they said, but I think that's fairly important. And I think, Elon Musk, I know not everyone's a fan, but he drew attention to some of those upstream risks in his tweets, raw materials especially. So I think some of those things, and then I'd also mention that the IEA report that came out today, I think, on renewable energy investments, and maybe others here have a better idea on the important take-home messages from that. They did a huge report on renewable energy spend and how important it is for regulations to be encouraging that. So there's multiple factors, I think. Not sure if anybody else wants to contribute to that.
Yeah, I agree with you, Cameron. Yeah. But some of the OEMs, those investments have been quite small, right? Almost token investments, just dipping their toe in. But 2021 has been a bumper year for battery metals investment compared to previous years, and that's on the back of the adoption of these and the takeoff of the market. So I think the investment is coming, although it's still quite small as to what is needed. And the OEMs, you just named BMW, for example, but the larger OEMs need to get more involved at the upstream, more in the downstream level, and upstream, what was I saying? And again, with pricing also, we need to see the real squeeze on the battery makers, and which comes all the way down to miners, is the squeeze on metal pricing, and the race to be price par with ICE is difficult to attract new investment into the mining sector if you're not going to get a return on your investment, or even on your original project investment. So it's a tricky situation. The money has to be there and has to be incentives. And obviously the European Union are going to heavily incentivize the domestic supply chain in Europe, even though we might say the metals are not there, depending on if they can be successfully mined in a short period of time, which is not going to be possible. For the figures that you mentioned, like the IEA, especially for their EV outlook, are huge, and I'm sure we're going to get into it later. But there's a looming metals deficit, so maybe Scott's got something to say about that. I've been reading some of the SPG stuff, and it's quite good.
Thanks, Cormac. No, I totally agree. I think, our MI team is certainly forecasting a deficit by 2025, as soon as 2025, right, for lithium, cobalt, and even for nickel. Lithium being the most severe, I'd say. And I totally agree, and I echo what you've said. I mean, if we're going to hit these targets of 2020, 2035, 2030 by most of these automotive companies saying that they're going to be fully electric, the question is where are you going to get that battery grade supply, right? So then that battery grade quality supply is the key question. So as you say, I think Q1 investment in the sector is more than what you saw throughout the whole of last year. So there certainly is that confidence back in that investment community, but I don't think it's anywhere near the level I would say the market would want and expect to see it to meet those targets.
Yeah, and if I may chip in as well, I completely agree on the side of OEMs being more involved. It's definitely a big help, and as mentioned, Elon Musk and Tesla, for example, they even went as far as to being a part of the project in New Caledonia, which has been facing difficulties in the past years. And that's extremely big because that challenge alone is daunting for those who have experience in actually doing the mining and refining side of the industry, and having OEMs being introduced as an advisor and actually improve the overall project can be a signal to other OEMs and producers that, yeah, this is a partnership that we might need in order to further incentivize additional supply to meet the growing demands from the battery metal sector. And also, we do see deficits as well. But another thing is that going back into how to incentivize more of exploration and adding supply. So the top 40 miners, according to a recent PwC report, actually hit a record low in their investments in 2016 and have never really recovered. And this is much more so the case for battery metals. After some record prices in between then and now, there hasn't really been that much of an investment that would lead to that additional supply that we need. But again, with the rising prices and the booming commodities prices that we see now, we see this to add to that help. But in terms of timing on when that will actually be materialized, that's another crucial part of the equation that the industry, not just the producers, but also the manufacturers, would need to factor in.
Yeah. No, I would just say that I guess I'm focused on lithium. Maybe I would just say that I mostly at Benchmark, I look after the lithium. So when I'm talking, I generally talk in terms of lithium. And we're definitely seeing a deficit, of course, since we're talking about that towards the end of the year. And there was a mention there too of governments and incentivization, I think, and we'll probably get into it a little later, but supply chains being an important component of the lithium supply, particularly in Europe and the US, and how are we going to get raw materials into places like Europe, and how are we going to get an integrated supply chain if we don't have the confidence that a project could go ahead, particularly in Western Europe, for example. There's a lot of community pushback, so potentially there could be a role for governments to provide some reassurance as to a lot of how the regulations work in those areas, and how that they might be able to deal with community pushback and things like that. So there's a little bit of a disconnect as well, I find, between the EU itself and local regulators. So there's definitely multiple levels of that could be done.
So, I mean, as you say, a lot of the governments really globally are looking to secure their own national supply chains for these key battery metals. How feasible do you think this is actually regionally dependent for there to be these internal supply chains? Who do you see leading the way with this? What are some of the different kind of benefits or risks that you see with these standalone supply chains?
Yeah, look, I mean, I guess I could just go first and shoot out some ideas. I think economic clustering here in Australia in terms of the mining expertise and the knowledge that we have here is a good thing. And I think that hopefully we start to build a downstream industry, although I've only got my fingers crossed for something any further than the hydroxide capacity that they're already building out, with Australia's reputation. And I already mentioned regarding Europe with some of those concerns around community concerns. Where are they going to store waste? Waste is going to be a big issue in the EU. Potentially, they can build downstream, but what about the mines? And I don't know if anybody else wants to add something there. I might be forgetting something.
Well, the Chinese have really been leading the way in securing their supply chain. If you talk about lithium, for example, their Shanghai desert, Shanghai salt projects are starting to get up and going now, and a lot of the Chinese battery companies seem to be getting involved in there, like BYD and Goshen are setting up processing plants down there to make lithium carbon equivalent materials. So we don't see that happening in Europe. I'm sure Northvolt might do something quite similar, but getting right in there, like BYD are developing patents for DLE, so they seem quite heavily involved. And then they went into Indonesia and secured their nickel supply chain, which is quite interesting. And they're taking multiple routes with the HPAL or with the Tingshan and nickel pig iron. So, and most of that will be used for the Chinese domestic market. So Europe and US, I know Australia's got a lot of nickel, but we'll have to find alternative sources because they might not be getting them from Indonesia.
Yeah, I completely agree. China has been a main driver, as we all know. But the interesting part is actually that even without the mine production capacity for these key battery metals, they were actually able to ramp up their own refining supply, which is a big thing, because even if we see deficits in mine capacities and other refined capacities, the actual refining capacity, for example, in cobalt sulfate or nickel sulfate is still in China. And even with the actual battery cell manufacturing capacity, China leads the way. And that is significant because as we've, I guess, heard or at least read about it, the EU is increasingly concerned about this, and they're playing catch up with such supply capacities and the market share. And what's even more interesting is, as Cormac mentioned about Indonesia and China going in there and leveraging their key industries to get the supply, is that China is a big market for EVs alone, and downstream demand is a big factor to incentivize actual setting up of your battery plants and all the upstream related industries that will feed into it. But Indonesia, we don't see it as a big market for EVs, at least not in the near term. That would actually incentivize setting up your key production plants in there. But the influx of China's capacity and seeking their own supply of nickel, and the government push in Indonesia to actually, if you want our nickel, you need to set up your plants here. That is a big push to actually, even if you don't see us as having as much of a market for EVs, we still have the supply you need for the raw materials. And that will incentivize you building your battery plants here. And that stemmed from not just from nickel sulfate capacity alone, but actual battery cell manufacturing capacity being announced.
Yeah, and if I just add to that, Alan, I agree with you. I think that, and actually what Cameron said too, it is very much a mantra of not in my backyard, and that's not just in Europe. I mean, that's also in the US, right? So there's been recent announcements by the Biden administration saying that they'll secure their materials from partner countries, right? So that was taken as a bit of a blow to the kind of existing projects in America, which are really good projects actually. But it's certainly a shift in mentality. I wonder personally how much that would last actually when you do see a supply tightness coming, as we've spoken about, if you really want to hit those targets of your own electric vehicle sort of penetration. So that's still yet to be seen. In terms of other materials, you're right. I mean, if you took cobalt, for instance, cobalt, majority of it is sourced in Africa, in the DRC, but the majority of it is refined in China, right? So, you have that massive dependency on Chinese refined supply. Alan touched on the nickel side and lithium too. I mean, it's no secret China is streets ahead of the US and Europe in terms of supply, securing that supply, but also in their own battery production and in their own gigafactories, right? So there's a lot of catching up to do. And therefore, we need prices to sort of be at where they are at the moment. That does incentivize investors. It does get, we're not at record highs by any shape or form. I don't think we're at any sort of levels that would cause any major disruptions. I think we're at a point where people can generally get a return or garner a return of investment of their capital. So that's where we are at the moment in Europe and the US. There's still quite some way to go.
And you bring up kind of pricing as one of these factors. Maybe do you want to touch a little bit about on price divergence that we're seeing in lithium and maybe some of the other key battery minerals?
Yeah, sure. Lithium has been interesting. So, typically the sort of the norm, if you want, was hydroxide, which is one of your lithium chemicals, always traded at a premium to carbonate. Carbonate was really sort of a feedstock to make your hydroxide. The spodumene or hard rock sort of production from Australia kind of really did change this alongside your resurgence, the renaissance, if you want, of your next generation LFP battery. Now, LFP battery is interesting because it was always looked at as just sort of a cheap, it's sort of a cheap battery, a very low range, not very energy dense. However, this was improved quite dramatically, and this really saw a big resurgence in China throughout last year, towards the end of last year. This actually caused carbonates to move above hydroxide and actually trade at a premium. Or maybe premium is a bit of a disingenuous way to put it, but at a higher price. No one really saw that coming. The two things that's really interesting about this is the LFP battery now has quite a significant range on it. And it doesn't use nickel or cobalt. So therefore, there's a big cost factor as well. It's a far cheaper battery. We have seen this normalize now, and hydroxide has actually moved now very recently back above very slightly in the Chinese markets. The seaborne market, though, and that's mostly I'm talking Japan, Korea, hydroxide has maintained a premium over carbonate over the last year or so. There's a couple of reasons for that. The reasons is hydroxide is a pound for pound a more complicated good. It's also classed as a dangerous good. The specifications of it are far higher than they are for carbonates. Now, that means if you're a battery maker, you want to secure that material because you want to get those specifications, and there are far fewer hydroxide producers than there are carbonates. So therefore, that's more sort of based on long-term contracts, not a lot of spot liquidity at all. Carbonate, on the other hand, is different. Carbonate has a far better, or so if you want bigger, spot market and far more liquidity. So therefore, it's more reflective, right? Carbonate moves first, typically in the Chinese market, just because of those reasons I mentioned first. And that's why we saw that inversion. But even in the bear run, when prices were crashing in 2018, carbonate, the domestic China carbonate price, was the first actually to move down as significantly as it did, and the rest of the prices followed suit.
I mean, our pricing team, I would say, also mentioned, I think last month, that they've seen the premium, the hydroxide premium come back slightly. And I would add, I guess, that they've told me that the Chinese domestic market was really seeing a price rally continuing against that backdrop of robust high nickel cathode demand as well, and that they'd escalated their hydroxide orders across the country as a cheaper feedstock than carbonate, just for that reason as well.
So you started to bring up a little bit of kind of a discussion on the LFP battery pros and cons. I suppose one of the biggest debates now is really kind of what's the chemistry that is going to win out in the end. Does it depend on different markets? I know the LFP has gained quite a bit of ground in China. What are your thoughts regarding battery chemistry as we move forward in this industry?
Sure. I guess I can start with this. I agree that, the recent changes in the price differential between carbonate and hydroxide is really brought upon by the increase in LFP demand. But we have to remember that this is specifically in China. And as for battery chemistries and forecasts, we still see higher nickel chemistries taking off and actually getting around 62% of the market share by 2025. Although we do see other chemistries actually taking a cut of that market share after 2025. But we don't see LFP progressing much, especially in passenger electric vehicles, because even though it has a better range than before, it's still nowhere near the range that you can get from your higher nickel chemistries like your nickel manganese, cobalt, and even your nickel cobalt aluminum batteries. With Tesla even mentioning that they will use NCA 90 in their premium Teslas that are going to be sold in China. So even in the domestic market for China alone, higher nickel chemistries will still be one of the main key drivers for adoption, especially in high energy dense electric vehicles. And this is pretty interesting because a lot of higher nickel chemistries actually benefit not just on even though if you benefit from not having nickel and cobalt in your LFP, you benefit more from the added range and energy density of the battery pack. Thereby, you actually you cut on other corners, such as making the electric vehicle lighter, cutting on other resources, and actually having an overall better efficient vehicle. So that's one of the main advantages of higher nickel chemistries. And that's why we still see them being the main drivers. And even up until 2035 would still take up around 40% of the market share, even if there are other technologies that will come about in between now and then.
Yeah, I agree with that, Alan. But you got to talk about regional, right? As you meant, you did differentiate between China, and then Europe is going to be different, and US requirements are different. And what really came out of that Tesla day was, we always talk about a global EV market all the time, but now we see it's broken down into segments. Volume as Volkswagen called it, and premium and affordable / robo-taxi level of and it looks like the affordable chemistries are going to go into cheaper models, lower range, and the premium is going to tend towards the high nickel or some of the other NCA or NCMA, the more interesting or more novel type chemistries. But it depends on where you're going to see the growth in the market. Is it going to be volume sales for China started restricting the licenses they were giving out to EV buyers in Shanghai and other cities, because it's only the rich who are getting these driving license. It's the only way to get a car. So China wants the EVs for the masses, not just for the wealthy. And I think Europe is the same way now. Tesla was geared towards the higher paying earners in California, right? So I think LFP is definitely going to have much larger role, and I wouldn't have said that 2 years ago either. But China is really pushing LFP. The Chinese battery makers are pushing LFP. They're all and the cathode material manufacturers are investing in new projects in developing lithium iron phosphate precursors and cathode materials. So it could be huge demand in China. I really just look at China, but China looks like LFP is going to be huge. And depending on whose source you read, that even already LFP is dominating, slightly over 50%. Depends, the numbers are all over the place, but it's definitely, we wouldn't have said it 2 years ago, LFP is where it is today. And it'll be interesting to see what happens in Europe, if they'll follow the Chinese model.
Yeah, Cormac, if I just say, like, I totally agree. And I think just to add on to that, I think it's also going to be a question of subsidies, right? I mean, China's been providing subsidies since 2010. Europe's really at that point where China was, 11 years ago. So we've got these aggressive subsidies that you're seeing in Germany and France, and therefore, when those do fall back, that is when you start seeing costs being a major factor for your consumers. So at the moment, of course, if I have a choice between a long-range nickel-rich and it's not that much more expensive as a consumer, of course, I'm going to choose that. However, if those subsidies are rolled back and there's actually a massive cost difference, then it is going to be about options. And I think that's what it is, right? I think talking about battery chemistries, it's not about, I don't think, one winning or prevailing over the other. It's optionality, right? It depends on what your needs are, individual needs are. I mean, how much mileage you're going to be doing in a week and what your buying power is. So I think, and then again, what your governmental subsidies are going to be for those vehicles, and therefore that's really going to determine what chemistry is going to be used. The other interesting thing I'd just say on LFP though is, as you said about China, it is very dominant at the moment, and I think in BYD which is your second biggest, electric vehicle producer, they've gone all in, right? They're only going to be buying into LFP, which I thought was a huge statement of what their vision is for LFP moving forward. But I do agree. I think nickel-rich chemistries are going to be your quickest growing segments of the market, just because it's a far smaller at the moment and will be a much bigger market, in Europe and the US moving forward for sure.
What do you think that means in terms of the outlook for nickel, pricing, supply and demand factors?
Maybe I can start. Yeah. I would like to just harken back on Scott's point. Yeah, I completely agree that in terms of chemistries, this is not a competition. It's about adding more choices, and that will just increase the adoption of electric vehicles more, regardless of the market. And yeah, I completely agree with those points. Now, looking at nickel specifically, we all know that relatively, nickel has been in a higher price environment as of last year. There has been ups and downs with some of the announcements, mostly coming from Indonesia, but it's at a much stronger price environment than where it was a few years back, and it's actually at a level previously forecasted, or at least estimated, that yeah, this will incentivize additional capacity. Now, in terms of what that actually means, it's still too early to say. A lot of price movements have really been speculative on what the government of Indonesia announces, especially with its partnerships that have been driving the conversations. Even with the technology that Tsingshan has announced last year, I guess there's just that misleading conversations in, I guess, early readers into the market that says, yeah, this is a groundbreaking technology, but this has been done before. It's not like it's a new technology. It's not groundbreaking in a sense that it hasn't existed before. It's being done in Indonesia right now. The question now is if they can scale up. And yeah, as we all know, if there's someone who can scale up in the nickel industry, that will be Tsingshan. Now, that's the main driving point, I guess, in terms of pricing and supply, because nickel always has this problem where if you announce something that will add to supply, which you really need that supply, especially for battery metals, it will then crash prices. That will further disincentivize additional supply, especially on where the market expects for that supply to come in. And this is in laterites and mostly through hydrometallurgical methods of processing nickel, especially in Indonesia or the Philippines, to produce your battery grade nickel for your electric vehicles. And I guess that's one thing that needs to be addressed by the market, because currently there is no price differential for class 1 and class 2 nickel. So whatever gets dragged on in the market, it drags both of the prices down. If there would be a price differential, let's say for incentivizing more battery metals production and additional capacity, then that may actually lead to more incentives for the market to actually add that capacity. Because as we all know, the class 2 nickel market is already comfortably supplied in the coming years.
And so some of the discussion around EVs and I suppose making them a greener product revolves around the recycling space. So how much of a current lithium-ion battery can actually be recycled? Do you know what the future plans are for further developing the recycling technology, and what do you see as kind of the impacts that that's going to make on the industry?
Yeah, well, there's some interesting projects going on in battery recycling. Like Li-Cycle is getting a lot from out of New York's getting a lot of attention, and you got Redwood Materials and Fortrum up in Finland. They quote different amounts of material that they can recycle. I think Fortrum have 80% they claim they can recycle, and Li-Cycle is 95%. And they both have, those particular companies have both two different techniques of processes of recycling. So I'm not an expert in recycling, but I noticed there's no overall agreed upon recycling process. And it's hard to to recycle batteries in a mass scale with different chemistries is quite difficult, because each process can be tailored for a specific chemistry, especially LFP versus NMC, or NMC in different levels of quantities of nickel, manganese, and cobalt. There's a lot of things to figure out in the recycling chain, but we have a few years to think about it, right? Most of the batteries aren't going to come back till 2030, or the first round. I know there's batteries come back from the Tesla Model X already because they're almost 10 years old. Europe and US are really interested because we don't have that much domestic raw material supply. So we would like the circular economy, and so it holds good promise. But in the meantime, we still need to mine to get those materials out to go into those batteries to be recycled.
If I could just add that, I think going forward that the recycling part of the supply from recycling will become an increasingly important part. But right now, some EV batteries are recycled, but it's very few, as there aren't that many coming back from use yet. Very little NCM. Feed is mostly production scrap and consumer electronics. And there's also a reasonable informal second life market in China. As a reference, a full battery pack from a Tesla is worth $15,000 to $20,000 in second life applications. So it's hard to get exact figures on production levels, as the big recyclers like GEM and Brunpey use the recycled product in-house, so it doesn't get sold into the open market. So raw materials in there could be like around $1,500 before recovery. But it really makes sense to economically to second life them for now, and it's better for the environment. And then bringing it back to what we were talking about, OEM involvement and the raw material costs as well. It really makes the point that potentially, and I don't know what you guys think about this, that OEMs shouldn't be worried about raw material costs at all. Just be focused on the good supplier. I know someone mentioned buying power as being an important part of the supply chain relationships at the moment, and going forward will be even more so as we see the deficit gap widen. So it should be, what's most important is getting your products delivered on spec and on time to your cathode producer, so they don't have to go into the spot market to fill an order. And I think adding that cost and not worrying too much about the cost of the raw materials is cheaper than the buyer of the car in the end. Putting options on the new car is going to end up costing more than the difference in the cost of the raw materials. Yeah, so it's all related. I think there's a lot of factors there. I'm not sure what you guys think about that.
Yeah, I completely agree. That's actually, well, I'm not an expert as well in terms of the technology and whether or not using batteries for a second life application before actually recycling them would impact the rates or the quality at which you can recycle the materials. But that's an interesting case all the more because we don't see recycling being needed as far as what the currently known global reserves of at least the key battery metals such as lithium, cobalt, and nickel are concerned. So this is something we looked at in various scenarios where we looked at if we track demand based on an economic transition base case scenario where nothing drastic changes and we follow the trajectory that has been in the market for a while, and having a net zero scenario where there is aggressive changes to actually meet net zero targets by 2050. And we in all our scenarios, we don't see a crucial depletion of reserves up until 2045 for an aggressive case of a net zero scenario wherein you have to really meet the demand. And in all these cases of an aggressive net zero scenario case, there is that possibility of the globally known reserves as of today is not enough to meet that. And that's wherein we factor in recycling as something that will actually help in the supply. So that's where we see at least generally that maybe from now up until before that, we can have a second life application use, as Cameron mentioned. But by then, we can actually recycle them and actually prolong the viability of these materials by adding to the supply as a recycled product. Now, in terms of the technology, our energy storage team actually looked at some of the details in battery recycling, and there's a key difference in terms of which methods are currently more beneficial, not just from a cost standpoint, because equipment costs for one of the technologies, which is hydrometallurgical processes, tend to be higher. But for the mixture of pyrometallurgical and hydrometallurgical processes in recycling batteries, they're more environmentally friendly. So there's that balance between actually thinking about why are we recycling? Of course, not just to add to supply, but actually to reduce emissions, which is one of the key driving forces for other recycling drives in other commodities and industries as well. And I guess lastly, in terms of market share, as we've all mentioned before in other segments, China and Europe still lead the way. They actually have the industry standards set for recoveries, with China requiring recyclers to recover around 98% for nickel, cobalt, and manganese, and 85% for lithium. Europe's standards are actually lower. They're around 95% for nickel, cobalt, and copper, while 70% for lithium, and that's by 2030. So even just setting the standards alone, these key producers and key markets for EVs as well also lead the way in actually setting the industry standards for recycling of batteries. And I think outside of those two regions, there's still a lot of catching up, especially on the recycling side as well.
Someone mentioned before BYD, and I don't know who, if they wanted to, because I think it's all related, the LFP based models and the blade battery, which I understand is meant to be more easily deconstructed so that recyclers have more easy access to the individual cells. So that's something like that we have to consider in relation to the greater use of LFPs, perhaps in the West, because obviously it's the nickel and the cobalt that's the valuable stuff in the battery, and the cheap iron as the LFP batteries are not going to be easily recycled. If that's, we have to consider that. I have to consider that going into my supply models going forward too, which will be fun. So.
Yeah, but the EU is mandatory to recycle, right? So it's not even economics. It'd be nice to make money off it, but someone's going to have to do. Those batteries will not be allowed into landfills. So either recycling to get the raw materials out, or neutralizing the battery so that it's not toxic to the environment and is not going to do any damage. So recycling is definitely going to happen, and hopefully is to recycle materials out. But as Cameron said, deconstructing the cell, what's needed is a uniform cell that all the recyclers get, and it's there's other methods besides recycling. There's a replenishing batteries, which is reactivating the cathode materials again, changing out the electrolyte, and then as long as the materials are similar, you could just repurpose the cell and not remove the cobalt, nickel, but it's that is a thought of going through. But that would require all the manufacturers making similar chemistry, similar cell formats, and easier to deconstruct. And that's the one thought is robotics. Earlier for battery recycling is humans who are deconstructing these cells, and it's very toxic. So we'd like robotics to take over a significant role, and I think that's what some of the Western companies such as Fortrum are going to do, which is robotic recycling. It's one thought.
And so you brought up kind of the environmental aspect of the batteries themselves. A lot of the discussion these days is revolving around net zero carbon materials. How do we actually make the materials that go into the EVs environmentally friendly? So coming down to the mining itself, the extraction, the processing. Does anyone have insight into kind of how we actually are going to be able to achieve these sort of net zero carbon battery materials? What is the outlook on that?
Well, every industry is under pressure now for net zero. It's just, not just battery or the mining industry, but since mining is at the bottom of the tier, they're under the most pressure because everything after that, right up to the OEMs, has to be carbon neutral by say 2050 if you go by the NATO report. But you know, the more integration of renewables, which I think at least 8 of the top 10 mining companies have, you know, have in their greening plan. So integration of renewables, integration of battery powered mining vehicles, and divesting from, you know, these mineral companies are involved in many industries, and so divesting from fossil fuel industries is a way to lower their carbon footprint and a strategy to go towards net zero.
I agree with Cormac and what he's saying about obviously renewable energy is one that and it's being seen in the mining industry in Australia increasingly, on-site solar, and potentially will be important in Africa because it's not always reliable to get your energy in Africa. Even if they do have like a hydro plant nearby, it's not always reliable. Not sure, like I agree that every industry in the mining sector is under pressure to produce less CO, like or to go to net zero. I definitely think battery minerals are the, you know, of course they're under the main, they're under scrutiny. And I'll just add as well that my number one thing to increase our progress towards net zero is transparency in reporting, and I think consistency in reporting metrics. There are no standard templates for an ESG report, for example, and carrying out and getting LCAs commissioned, life cycle analyses commissioned on your project. And that's something that BMI, like Benchmarks, actually started doing recently as well, because I think it's important and it's understandable why battery minerals are under that pressure increasingly. But there's many things I think that can be done.
Yeah, I'd say there's a pressure, but that pressure doesn't necessarily translate into action, or at least overall internal pressure within each of the producers or those players in the battery metal space we would like to think as much. So I guess for context, around a quarter of total carbon emissions from manufacturing of lithium-ion batteries come from raw materials. So, but they're not exactly the same, right? Especially for looking specifically for nickel. Nickel is one of the most carbon intensive metals to produce. We've actually looked at this and we found out that overall, a general weighted average globally, nickel produces around 19 tons of CO2 equivalent per metric ton of nickel that you produce. That's the highest. That's even higher than aluminum, which is very carbon intensive, and higher than all the other metals we've looked at, including copper, zinc, lead, and steel. And looking at that alone, we haven't seen that much pressure on the nickel industry to decarbonize. We haven't seen Indonesia being the largest producer and will be the largest producer even in the refined space in the coming years as more of their smelters come online, actually have a roadmap in order to decarbonize their own production. This is simply because I believe there's still that balance in, yeah, we want green metals, but we still need the supply. And that is sort of a push that is not coming from the government. It's actually coming from more of the manufacturer side. That's why even if, for example, Elon Musk tweets that, yeah, we want nickel, but we want it in a sustainable and environmentally friendly manner in terms of its production. That doesn't translate into action from the government Indonesian side, simply because we still see reports that, yeah, Tesla has been in discussion with the government in Indonesia. But we are seeing progress here. Tsingshan alone, apart from their nickel matte announcement last year, we also saw the influx of them actually investing in renewables. And as Cormac and Cameron agreed upon, we need more investment into renewables in mining and refining sites, simply because it's most of the electrified processes are actually very easy to decarbonize. You just need to switch to your main energy source being renewables in order to have less carbon intensive metals as a result. But then again, in Indonesia alone, we see PT Valley Indonesia, for example, as one of the models for producing nickel, and not just nickel, it's class 1 nickel that goes into batteries, right? And they're actually using hydro power, which they control, in order to power up their plants. But still, they have higher carbon emissions intensities compared to sulfide producers in elsewhere. So there's still that balance that, yeah, we need to determine where the supply will come from and how to actually attack from that angle that, yeah, based on this technology and this resource, this is the best way to decarbonize. And this is very difficult because even if there's no pressure, there are other factors that the base metals industry and the battery metals industry specifically would like to focus on, especially in other environmental factors such as air pollution or the tailings management systems, which are really the driving conversations in most of the local communities where these mines operate. And we see that one of the main actions that would help drive the transition would be shift in the higher and larger market share metals such as steel and aluminum. And we see that already. There are a lot of technologies that are going to decarbonize steel and aluminum. And a lot of these, if scaled up or even scaled down to the base metals industry that produce copper, nickel, and aluminum, which are needed for batteries, would actually lead to more decarbonization and might be more of an incentive for the battery metals industry to accept these technologies into their own supply chains and in order to produce, if not net zero metals, at least significantly lower carbon intensive metals for the battery industry.
Yeah, and I completely agree, Alan. And just, at Platts, we've actually started to assess green metals. Green metals is one of our biggest focus as part of our ESG movement that we've got as part of our core, one of the core pillars actually of the business, right? So green aluminium actually, ironically, is one of the prices we've just recently started assessing on a daily basis. And we're looking at other green metals, green steel being one. And that's really just making use of your renewables, whether that be hydro or hydrogen, right? Or just, other means of doing it. On battery metals, I agree with what Cameron said, actually. I think at the moment we don't have a very strict or agreed upon framework, and that's what really the industry needs. There is a lot of work that is being done, particularly I'm thinking now cobalt. Cobalt is obviously not just on a cost basis, but also on a sustainability question that has been trying to be thrifted out of your battery metals for some time now, right? And I think it's going to continue to be a major component moving forward, certainly. But you have seen your major mining companies, have these certificates of origin, making sure that they can prove that this is ethically sourced material, and that's what's going into your supply chains. And that's really been insisted upon by your OEMs. I think that's going to happen for the others, right? I think your lithium and your nickel prices for sure are going to be impacted by these consumer wants, and the OEM really demands. The question, I guess, is as you mentioned on the Tsingshan announcement with the nickel matte, is that actually going to be accepted by Western OEMs in their supply chain, right? Because it is not environmentally friendly. It's a complete opposite, actually. And same thing with your lithium. There are ways, I guess, that companies can work on sort of reducing that carbon footprint quite significantly, whether that's revegetation or repurposing of worked areas. Recycling of water, I think, is going to be a major factor, and other raw materials, and also then waste minimization, which obviously can reduce competition for resources, right? So this is all points that are going to be taken into consideration in any business plan. ESG is going to be a fundamental factor for any of these battery metals moving forward. It's not going to be reversed anytime soon. We're far past the tipping point. Yeah.
If you have any final thoughts regarding ESG to close off the conversation.
Well, I think actually ESG is more of a, it's not sustainability investing. I think ESG is good risk management too. So I just mentioned that. And if we're talking about ESG, we're talking about social and governance as well. And then we're thinking about great jurisdictions such as Australia, which are primed with knowledge and relatively good regulatory systems in place. So, come to Australia and let's build that lithium-ion downstream into Australia. And if we're just talking about emissions only, I think Yeah, I think electricity is usually the highest source of impact in that system. Energy intensive processing would, you know, change environmental indicators quite large, and impact categories quite immensely, and those are the main things. Yeah.
Yeah, and
Great.
I agree. There's no losing battle with ESG. Like, it will benefit everyone, all stakeholders in the industry, and it can even help in your own operational efficiencies that would lead to incentivized operational cost benefits. So yeah, the industry is definitely moving forward there, regardless if there's pressure. I guess the pressure coming from either the manufacturer side or the producer side, or even from the governments that are involved, would just drive that to be at a much faster rate than maybe what we are initially expecting. But overall, ESG is definitely going to be a part of the future, not just for battery metals, but for the metals industry as a whole.
Great. And Cormac, any closing thoughts?
Yeah, I think you know, we're talking about carbon emissions from nickel smelters and nickel mining in Indonesia, but we also have to look after the people on the ground there. And I think, you know, in the Western world, we just want low CO2 in the nickel and don't really care where it comes from. But we need to improve the places we're taking our nickel from, and make sure the people and the environment is, you know, the same way we arrived. So I really think ESG is a critical part of this industry moving forward, and without it, you know, lithium-ion batteries don't make sense. So I'm all for it.
Great. Okay, so I think that's it's a nice place to close out this discussion. So I'd like to thank all of our panelists for taking part today, and we hope to see everyone at an in-person event soon. Thank you.